Where do I begin this week? Huh, guys? Where do I begin? Let me do this. How about I introduce myself? My name is Doug, and welcome to another edition of Stock Market Mutterings. If this is your first time by, I welcome you with open arms, but this is also where I will do my best to take a grope in the murkiness. I will try to make some sense out of the stock market, if possible. But more importantly, I will provide you with some knowledge, some quality trade setups, and I hope by the end of the week, the information that I share with you, the things that we talk about, make you far richer on Friday than you were on Monday. So anyway, I want to kind of talk about something that I was talking a little bit about in the last happy hour, which I'll post up here somewhere as well. And if you guys can remember that, I was talking about how we saw this just maddening moves on Friday where this just ignorance of not seeing the other side of maybe a bearish argument or a potential sell-off, or that we go through these cycles where euphoria reaches a maximum. And I wanted to kind of go a little bit deeper on that with this market mutterings. Now, this all started with GME. Now, maybe even you could say Signal. I'm talking about extreme insanity here, and just hear me out, okay? We could say it kind of started with Signal. When I'm talking about euphoria, I'm talking about when everything just reaches an epic level and just starts blowing up in all directions. And one of the things I talked about in that happy hour was how we're seeing an asset bubble across the board, which we don't always see, which is asset bubble and not just stocks, but housing, Bitcoins, and almost every asset is in some form of a bubble. Now you have this small cap sector, which on Friday just had one massive asset bubble, and I'll explain. So when I was talking about Signal, maybe you could say it started with them. Most of you probably know the story by now. It's kind of old news at this point. But Elon Musk tweeted a couple of weeks ago that he was investing in Signal, which was the Signal app. But people bought this company, SIGL, and it went just crazy. Here, I'll just put it up on the screen if you guys don't even know what I'm talking about. And it just went nuts. It was like a penny stock that went just stupid parabolic up here into the 70s, just insane. And it just shows the level of insanity that just by a mistake on a company can get it to trade, I don't know, thousands of percent. So anyway, this brings me to GME. Now, GME obviously was something between apparently a Reddit message board creating a short squeeze against Citron short selling. I'm sure there's more to it here, and more will come out in time, but you get the gist of it here. Now, I'm not saying that parabolics mark market tops or indicate that, because it's not the first time we've seen it. We've seen things like KBIO, dry ships. We've seen all kinds of cheap stocks go parabolic. And in fact, every year there's a handful of them. Ever since I've been doing it, it's like you got the VLTCs, OPHCs. There's just tons of them I'm probably just forgetting about now. Digley's, Lakes, all of those. I mean, every year you're going to get a handful of them. That's not the issue. What I actually saw Friday was something that I haven't seen in a while, and that's where a collective group of cheaper momentum stocks just went off the rails. I mean, it was just like everything just exploded in small capville. And I don't know if it was getting to the end of the cycle here with just a major ramp up in this GME. And look, if you guys are in it and you're new to trading, sell some of this up here. It's not going to hold, okay? Maybe it goes a little bit higher, but this is a Momo stock. This is a stock for a trade and a play. If you're in this thing since like $10 to $15, good for you. Please pay yourself. You'll thank me for it later. I mean, I'm not saying it can't go to 100. It could. We saw dry ships go up to 300. But look at dry ships. Look at some of those other past stocks and get an idea for what the ending result may be here. Not to say this one's necessarily as bad as those, but you could expect a similar result. Now, that's kind of what happened with GME. But what we saw, and guys, I'm in some of these. I have mentioned some of these on the last market mutterings. I have positions in some of these that I'm going to mention. One is PLTR. So again, I'm not here kicking the hater bus. I got these positions. I love it when my stuff goes super parabolic, but I'm also not ignorant. I've learned my lesson that the market will humble your ass. Give it enough time. It will smack you right in the face with no apologies. And when I see certain things, I kind of have an idea, it's time to get out, or it's time to sell a piece of this position and put money in your pocket. Otherwise, this stuff will evaporate in front of your face. So I have a position in Peloton. Here was one of them. Just, there it goes. This thing just went absolutely ballistic. I also have a position in Fubo. Again, I've talked about this stock. This is one of the stocks I put on my list to be a doubler, you know, and look at this thing, just massive parabolic on this one. I'm going to try to recall a couple, I think, from memory. I think this Jimmy, here is another one. Just absolute huge move on this one. And I'm sure if you go down the list, let me just see if I can just memorize like this SAVA, SAVA. Anyway, what I'm saying is a lot of these Momo stocks, some which I am in, just exploded. And I don't hate that, but one thing that's different is you had Signal, which was the first one. You had this GameStop, which is the second. And then Friday, it's like everybody just went off on some algo capitulation and just bought anything that was a momentum stock cheap at any price. And everything went. Now, normally, that marks obvious euphoria and balls, right? Balls. And this is one of the reasons why you're seeing the small cap index, the IWM, go up so much, because the longer bull markets last, the more speculation trades take hold. It's the more brave, the more ballsy traders get, and they tend to take more risks. I didn't type this. IWM. There we go. And this is one of the reasons why the small cap index has actually outperformed the other ones. It's been really a flight to where everybody wants to be since Thanksgiving, really. Now, you can make the case that maybe it's the traders that are staying home on lockdown from COVID. Who knows? Who really knows the whole story? But anyway, that's the deal. What am I saying here? You got to be careful on this kind of stuff, okay? I don't want to sound, again, like I said in the happy hour, I don't want to sound like the grumpy old curmudgeon-y old man who's trying to spoil people's party. I'm just trying to say that in the game of stock market, if you're going to do this for a living and you want to make money, everybody that I know makes money pays themselves. And that means when you get a big move on something, the purpose is to pay yourself, is to pull money out of the market, pay yourself. And also to reward yourself for that good work by spending a little bit of it on yourself, or taking someone out, or having a nice dinner, just something that lets you know that you are working for a living. Trust me, this makes a big emotional and a mental difference. If you make some money, if you're just sitting in there, it's just numbers on a piece of paper, and you're sort of trading for sport and fun with no end game. And if you don't have an end game, and you don't have targets, and you don't have money you're pulling out of the market, then in essence, you're eventually going to give it back. The longer it stays in there, the more opportunity the market has to take it back for you. Remember, it's like the casino. You sit at the table too long, they're going to take you down. So just kind of remember that. Just pay yourself. And congratulations, you're doing a great job. And I'll be honest with you guys, this is where the money is right now. It's in these smaller caps. Cheaper stocks have been the go-to plays for right now. And, if you know how to play these things and you know how to trade them, good. You're making money, and that's where you should be. So I like these stocks. I like them to continue. I think at this point, when I say to continue, I like Planter. I like Fubo. I like Momo stocks, like NIO. These are stocks I've already talked about. I'm bullish on these. Peloton might be a little bit of stretch for that for most, since it's trading in the hundreds. I love this stock too. This is one of my longer term holdings, but all of those, I think now, especially the cheaper ones, as far as we like PLTR, Fubo, FUV is another one, FUV. I've moved away from my long swing positions on these and opted to go into more of a day trading environment. Now, the reason I want to do that is I think they've reached a point price-wise where the risk to reward isn't good enough for holding. There's too many consequences that could happen overnight with halts, secondaries. It's really common that companies do that. So I think at this point it's not. Now, let me clarify this too. It depends on what kind of trader you are. If you're just somebody that's doing this as a hobbyist and you're building some swing positions for the long term, you got an argument you can make for holding. It doesn't really matter what I'm talking about. I'm talking about short-term momentum traders here, and I'm a short-term trader because that's where I make the most of my money. And when I see things that lose risk to reward, I don't want to be a part of them. That doesn't mean I won't take shots day trading them. It's just once they reach a certain level on the daily charts, I don't want it. Not when I should clarify, when I say too expensive or in price-wise they've moved too far, it's how far they've moved in a short period of time. In the grand scheme of things, if you're saying is $27 to $30 too much for a PLTR, the answer is no, not in my opinion. I see that stock possibly being 50 to 60, maybe even more before the year is over. However, if it was $22 yesterday and it goes straight to 30, it's really difficult for that to just continue on unabated all the way to 50. So kind of remember that there. I guess what I'm really trying to say here is I saw some things that are unsettling. I always know, again, I'm somebody that's been through 2 market crashes, and I'm not saying that this time is going to mimic those, but normally it's when you start to see dumb money be rewarded. When you start to see such reward for such ignorance is always cause for concern. Now, again, I'm not trying to be the bearer of bad news in this type of argument. I'm not, again, I've made money, my fair share of money on this. I'm not somebody that's sitting here just bitching because they missed something, because I don't miss too many things. I just see something that, when I see something that's concerning and different, that's how I've been able to stay in this business for 23 years, is because I know when the music stops. I've been able to avoid massive disasters because I learned my lesson in 2000 and 2001. And it's ugly. It's not a place that you want to be. And the thing is that we talked about in that happy hour, it doesn't take very long for someone to make a big mistake. The market will take your money 10 times faster than it lets you keep it. It really does work that way. Like I say, it's much easier to destroy than it is to create. Just be on guard there. Now, when we actually look at the market itself, again, we're bullish until we're not bullish. I mean, what the case now becomes is what are you going to do to get this thing to go down? What needs to happen that hasn't happened. Now, the market will obviously create some sort of excuse, let's call it, for a lack of a better word. Maybe it'll create an excuse. Something will come by like coronavirus last year and pull this thing 10, 15% down. Yeah, it's just part of doing business. That's just the way the market works. But I feel right now that the SPY wants to tag this 400 or 4,000 on the SPX. I think you're going to see that. I think you've gone too far, too much emotion. Looks like the home gamer trader is going to stick around for a little while because no one's going back to work anytime soon, it appears. More stimulus coming in the way with the new administration. So I expect a little bit of this to continue on maybe a little bit longer than some people want. Or I can see this still continuing to go on. Only time will tell. The thing, though, that I'll leave you with is this. Let me just kind of give you the stocks. I am still bullish on the PLTR, the Fubos, the Neos, and the Pelotons. Only Peloton am I willing to really hold overnight, maybe a little bit of Neo via options, because I've already talked about being Chinese. The other, I'm just back to day trading those. I think they're great buy the dips, but they're just positioned right now where I need to see some consolidation or digestion of the recent move before I can get in. I just really think there's value somewhere else. I could be wrong, but that's just how I roll, and that's just how I've done it, and I feel better doing it that way. Maybe I'm wrong on this one, and they just continue to go parabolic. Who knows? So I think even though, nonetheless, you're obligated to pay yourself a little bit after such a big move, it's the right thing to do in this market. So I'm still bullish on those, and I'm still bullish on the market. I still think it continues until we see something effective that really, really takes this thing down and sticks it down. And even then, I'm only expecting maybe 10, 15% correction, and then it'll be back to business as usual. It's a different era of trading altogether. So just kind of keep that in mind. Now, the last thing I was going to say is as a trader, develop a risk-on, risk-off principle, because a lot of people ask about how do you trade through this. And the formula for me is risk-on, risk-off. While things are in good cycles and there's room to the upside, I have a tendency to take more risk. As we move closer to all-time highs, I start to back off my risk. Where a lot of the newer traders, this is where the difference comes in, why I'm warning you guys, is they become more ignorant, they become more aggressive, they become more silly, they become more gambling nature, where the pro traders start to pull back a little bit and be more conservative at those levels. And the only reason is because we've all learned at some point through experience that corrections are fast, brutal, and unforgiving. And if you don't learn the lesson via an experienced trader, you will learn the lesson with your pocketbook. And you don't want to do that. So guys, I want to thank you very much for watching this edition of Stock Market Mutterings. I hope I answered your questions. I want to know what stocks you're trading. I want you to put them down there in the comment section. Let me know what you want me to look at. The AMDs, the Facebooks, the Googles, Netflix, whatever you're trading, whatever you got, send it to me. Until next week, thank you very much. Take care. Talk to you later.